Tomasz, you've done a lot of investing in financial services and fintech.
Yeah, that's true. That's surprisingly the fintech became like a major stream of our profits and our exits in the last 2 years. We didn't expect that, but yes, that's an amazing time for fintech in Europe, and there are a lot of demand. I mean, honestly, like our latest exit is the fintech payment company, which we closed on 4th of January. Herman Friedman was the buyer, so it was the first investment in Herman Friedman in this part of the world. That's a very hot segment. That's why we thought it's a good idea to have a sub-segment about that space. And gentlemen, maybe let's start with a kind of obvious question. You saw there were so many fintech exits. What's your view on how long? Because there was a time for e-commerce. There was a lot of interest in e-commerce. 10 years ago, there was a lot of interest in media. How long will we have this bonanza in the financial services disruption?
So, I mean, in my view, we are nowhere close to the peak, and I think that's for a couple of reasons. So, if
China close, or we are close to
we are nowhere close. No, so
maybe take a step back. Fintech didn't pop out of the earth 5 years ago in Silicon Valley. Technology has been used in banks, insurance companies, asset managers, wealth managers for a very long time. So if you look back over time, I think it's been a bonanza for quite a while. If you go back to the MasterCards of the world, others are from the 60s even. You saw a lot of great financial technology innovation in the 80s. But I guess what I view is I think things will continue to move on an upward trajectory, but much more cyclically. I think you'll see some ups and some downs. I think there are certain sub-segments within financial technology that are certainly overheated and actually have come down or are coming down.
Which one?
Like online lending, I think, is an obvious one. So, you have the Prosper's lending club, SoFi's of the world at multi-billion-dollar valuations come crashing back down to earth
in the next years.
So that's a super interesting point, because we're sort of seeing how democratization of platforms, the fact that everyone in the world now has a smartphone, the fact that blockchains can manufacture trust, and a number of sort of other technologies are coming out. Does that in any way impact the bank's ability to continue to innovate, to continue to lead, to continue to sort of control the financial services space, or will the model of the bank have to evolve? And I'm sort of thinking here about payment services directly too, and open banking, where banks, the role of the bank changes and perhaps moves away from the user interface and the user experience layer and the product itself.
The inspiration comes both from the fintechs, but also the big techs. And I think increasingly more what we are seeing in the market is people actually starting believing that they have to look up to the big techs. So, show me a bank in Europe that is as good as Amazon in understanding client behavior and following patterns and suggesting the next product. No bank can do it as well. And particularly in the world of PSD2, you're starting to have the world of invisible banking.
Or insurance companies.
Just to give you examples, we became invested in iZettle by buying out MasterCard. Yes. And still we were able to make a times money. But another good example is banks stepping to an investor in Marketing Voice, a lending platform where we are an investor in the UK. But I think, but for me, it's still the big question, because we observed that in TNT and media 20 years ago, and basically they lost to the disruptors, yes. Maybe they were not aware about the problem. Then we observed that same problem 10 years ago in retail. Basically, these people were more educated than the media, because they already saw the problem where the old media lost to the new media, yes. But anyway, and currently banks and insurance companies, they are saying they understand the problem, and they try to mitigate the problem.
I think what could well happen is that you've got some of the European powerhouses, European banking powerhouses, strong innovators who will invest in neobanks, will think of different business models slightly detached from all the legacy that they have, all the numerous, complicated, unattractive IT systems, and will develop a way to become as attractive as GAFA.
So maybe I've got a view, which is, I actually think it will be different this time. I think the incumbents that figure out how to innovate will be winners. And I think there are two big reasons for that. I think one, regulation. We need somebody to help us. We want to do the maintenance inside the bank that we need to do, but we want to find partners who can help us innovate outside the bank, or even kind of inside the bank, but in a different way, in a different space. I think Barclays in the UK has done a really good job of it.
Okay, but Andy, you see that from the New York perspective. We are as Polish people, we always think we are great and amazing, but from the New York perspective, where you see the interesting regions in Europe and real innovators, real product innovators, and yeah.
Yeah, so definitely. So from a more U.S. perspective, we've actually found Europe much more interesting. So this last year we made 3 investments in Europe, and part of that is a relative value. So the U.S., particularly the West Coast, has gotten ridiculously expensive. So it's quite hard for us to find things to do there. But the other is, I think, kind of echoing what you said, I think Europe is definitely ahead of the U.S. in terms of thinking about financial technology, how to apply it, how to work with early stage companies. So this whole concept of a sandbox was generated out of Europe. So I think the opportunity now is there isn't really a kind of post Brexit coming, a clear leader to kind of take the challenge on and say who's going to be the fintech leader in Europe post-London. And maybe it's a bunch of different places, and they tend to be good at, if you take a step back, right, we talk about fintech as though it's a sort of single homogenous thing. Somebody that's building, a new PSD payment system versus someone that's building a claims processing system for insurance is like a totally different business. So it's a big, big market in terms of all the different sectors and subsectors within fintech. So, my guess is I think you'll see pockets of development, and that's kind of what we've seen today, where there's different places that tend to be better at certain things than other places.
Andy, what would be your advice? Because in the audience, we've got a lot of leaders in financial institutions in Europe. What would be your advice to them or their colleagues in government or regulatory bodies on what could they be doing to further strengthen that fintech business?
Yeah, I think to your point earlier, right, technology has disrupted a lot of other industries, and so you can sit on your existing businesses and look at them, but I think that the incumbents that innovate will win, those incumbents will be dramatically different than they are today. And to your question, who lives in, a lot of them will die because they won't innovate. So I think it's going to be a very binary outcome. So I think if you're a regulator, if you're a financial institution, you have to figure out how to innovate. You have to put technology at the top of your agenda.
Maybe we have a couple of experienced fintech executives or financial service executives. Roman, that you're running a very large financial institution in Poland, and we didn't touch really the insurance space. That where PZU is seeing the kind of key areas of disruption in insurance industry.
Well, when I look at our business, actually, we see a lot of startups that enter the space, especially there where they can see margin. For example, in distribution, they're trying to kick out the intermediary brokers, like the digital brokers. I think it's a huge trend. On the claims side, it's like where you actually spend a lot of money. You see a lot of startups getting there. But my observation, at least looking from our perspective, is that they don't challenge our existing models so much, but just try to cooperate them. So they enter as a B2B services almost, or some additional layers of distribution. So I think for us, the critical question is like how to cooperate with these new companies that are entering the market. And maybe just a slight comment is like, right now we're running 30 initiatives in the company, strategic projects. There is no single one that doesn't have technology elements.
I still believe that was also my conclusion from the previous Super Return conference, that still we are waiting for the Facebook things in financial services and insurtech, yes, fintech. That was my kind of feeling. That remember media, like media disruption. That Yahoo, Google was like obvious things, yes, and then was Facebook. Facebook was something very new, yeah. There was no Facebook in the traditional world, yes. And I also, that's my feeling that in financial services and insurtech, that should be kind of next wave of the of the business models which will really disrupt the space. Yes, we still don't see the disruptions.
I'll have a different view. I think a Facebook or a Google in fintech is unlikely. I think you'll much more have the continue. I think you continue to have these really great 5, 10, 20, $30 billion companies, but you're not going to have $1 billion companies that come out of fintech. I don't think.
No valuation. And just because Facebook was like a new type of thing. Yes, there was nothing existing like Facebook in the traditional media. Yeah?
So it's often like this with the early wave of innovation. We take things that existed in the previous paradigm and we move them into the next technology layer. So early days of internet, we take Yellow Pages and we move Yellow Pages online. But then the digitally native models that didn't exist in the previous world, they happen as sort of step 2 in the end.
But coming back to your point about Facebook, I think because you're thinking about Facebook in terms of business model, but I really do think that we also need a Facebook in terms of scale. And that comes back to our previous discussions, how developed European venture capital system is versus China, for instance. If you look at who really invests in companies in China, it's BAT really, Baidu, Alibaba, Tencent. They provide 30% of all capital deployed to venture capital.
I think finding those ways to interface with the ecosystem and being aware that it will happen, right? There will be a moonshot that gets landed somewhere. And for people to be looking for it now and not just sitting back and covering their eyes and hoping that things go well.
So sounds like lots more of work for all the venture capitalists in the room and
growth investors in buyouts.
Growth investors, buyouts,
strategic players.
execs,
Everybody
large
busy.
companies, governments, and something we can really need globally as
No, but does it sound good for the let's say, it sounds like fintech and insurtech not really an opportunity for global champions from Europe, yes? Because lack of large sponsors will probably limit the expansion to the European market, but on the other hand, a kind of safe space for making money.
I would differ slightly, because I think that's right on the consumer side, where you've seen, there's very few sort of consumer fintechs that have managed to go even from one geography to another.
PayPal?
Okay, one, very few. But you've seen many of the B2B infrastructure be able to go scale globally.
Oh, there is one, Klarna, and that's a Polish founder.
Yeah. But I think FIS, Fiserv, Jack Henry, Temenos, MasterCard, you can go through a long list of infrastructure that's managed to scale globally. So I think that's the opportunity because, the peculiarities of each, individual country and region are so different on the consumer end, but on the back end, they're basically, your bank, you operate kind of in the same way, your insurance company, you operate kind of in the same way. So I think my view would be that the global champion will likely come from an infrastructure.
Banks and insurance companies run on very old systems in terms of concepts, and currently you see a couple of different ideas around back office emerging, and blockchain could very well be one. Other one is cloud. This is much more realistic probably, and many more companies have actually realized how to use cloud to their advantage. I think blockchain has so far haven't really succeeded, and that's really visible here in Davos. I remember last year when we were walking down the promenade, you saw every shop covered in blockchain logos, and
Bitcoin was much higher.
Bitcoin was much higher, but currently I think a lot of people have come to the conclusion that blockchain is not necessarily a technology solution. That probably anything you can solve with blockchain, you can solve with central systems, cheaper, faster, probably better. I think it's not a technology solution, it's a political solution because it really solves the trust issue. And once you figure out how to apply the blockchain, the very core value at the center of a banking system, then you can have some very interesting ideas. I think Ripple can be one of the examples that has succeeded in that.
Our Polish company, Bylan.
That's correct.
But we promised to finish this panel 4:30. Thank you very much. And we didn't cover really like area of N26, which we discussed on the phone, Revolut. A lot of interesting components of fintech, but unfortunately we have to finish. Thank you very much for your views, and I hope we delivered an interesting discussion here. Thank you.
Thank you.